Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to look at Twitter, see what people are talking about, see what's going on. Obviously, I'm going to give my financial opinions in this. So let's dive right in. Let's see what's going on in the Twitter or FinTwit, however they call it, and give you my opinions around it. And again, if you want to follow me, it's at finding_finance, or you can follow me and join our community at finding-value.com if you'd like. Discount code and the coupon code if you want a discount. So discount is the coupon code. So we got Gold Ventures here. This is XPT, which is actually platinum, priced in US dollars, monthly, pushing to break out. So this is a big picture view of it, coming all the way from 2008. I know a lot of my charts, they're a little bit different than this, but we're about to push to the upside. That's 1073. We break out of this thing, oh man, we're going to get a nice big move in platinum there. So, yeah, it's looking fantastic. We'll get a break here, and it's going to be gone with the wind. These lows are also coming on up. It's going to be a fun ride, guys. I'll say, heavily riding platinum, physical platinum as well. Coming on down, so the average 30-year fixed mortgage rate climbs to 6.7%. That's the highest reading since 3/21/2023. One thing I want to say is prices are holding steady, are slightly higher, slightly lower, depending on where you're looking in the United States and where you're located. But mortgage rates are pretty high. And most everyone would say, oh, mortgage rates that high would crash the market. Well, it's not crashing the market. And housing starts are basically flat right now at over 1.4 million housing starts per month. That is a very high number, especially compared to history. So even though we've got 6.7% interest rates, the market is holding together quite well. Here's copper. It says fundamentals are aligned for a big breakout in copper. Supply at multi-year lows. Cupboard is bare. Aging mines and dropping grades demand to jump to meet electrification and greening for net zero. And he's poking copper, saying, come on, do something. Coming on down, we've got uranium looks weak, could see spills soon. This is energy fuels. We've got that shoulder, potential break of the line here. And it's just kind of working slightly higher. We could see a substantial drop, at least in his opinion, in some of these uranium companies. Someone was asking me, do I agree with it? Yeah, the chart looks legit, and it could potentially fall, especially if we see interest rates go down, where people get afraid in the market. We've got an event where people get scared. That is a possibility, but it doesn't mean that this will 100% for surely go to the level that he thinks it's going to go to. But I'm always open for that possibility, and this very well could be. Now, Scott and I did a bunch of videos some time back showing this lead-in pattern, which is basically this pattern. It's very similar, where it's basically a false breakout, and then you rip it in a slingshot fashion to the upside. This is all going to determine, it's not determined by the chart here necessarily. It's determined by, obviously, the herd lining it up like it has, but also what the market conditions are. If the market conditions has a crash in the system, and that crash, we would see it in interest rates. If we see interest rates dive, then yes, I would be highly worried that this could also fall down with it. If we see interest rates continue to go higher, then I would say that this fear could be abated, because inflation or problems in the debt market are more problemsome than what we see here in this setup. But I'm going to remain open, and yes, it very well could go down. This is silver, so SLJ divided by silver, it's the ratio here. It says the ratio tells us the time is nearing for silver mining impulse higher. Now, I will say this, though. We're seeing a lot of positive signals in silver, GDX, the mining companies, stuff like that. That does run, it could run opposite of this. Now, in some of these time frames, like in 2002, 2003, we saw uranium run and we saw silver, gold run all together. It was kind of an everything melt up at that time frame. Are we at that exact time frame where everything's going to melt up? Or do we still have one last fall or sell off before that run, before we get that run? I don't know. Everyone, they like to talk like they know about everything. I'm comfortable saying that I don't know what the immediate term future is. I can see fundamental reasons in a lot of different commodities for them to go higher even today in terms of their supply, demand, and the deficits and the inventory levels of a bunch of different commodities. I can also recognize that the technical chart patterns on some of the commodities do not look favorable. So what does someone do when you've got the fundamentals that look absolutely excellent and the technicals that look bad? I think that both of them could be right on different time frames. I think that we could see a move to the downside from the technicals and the lineup for the short term. But I also think that the fundamentals and everything is going to line up for a big reversal pattern to the upside shortly thereafter. How big is this pullback going to be before that move? I don't know. I don't think anyone knows that with any sort of certainty. But I also don't want to sell out of my position, or at least sell out of everything and not have a core position and have some exposure to it, because the fundamentals are looking so good. And inventories are so low. And I'm not talking specifically inventories on uranium. I'm just saying, because I don't know what the inventories are on uranium. It seems like that's a area where everybody wants to keep everything hidden. But inventories in copper and all these other ones, oil, they do look like they could easily draw down over time, and prices should reflect that drawdown in inventory. But is there something in the system that needs to get flushed out? Very well could be. Coming on down here, it says, in my opinion, the daily cycle 2 is starting here for GDX. Could get very interesting as a lot of participants believe in a sharp drop. And I agree, a lot of people think that we're going to go lower, but we could easily reverse this thing and just rip it. Gold is sitting on top of support levels. A lot of the companies, mining companies, are also sitting on top of support levels. Maybe you can draw a line going across here and we could pull back a little bit more, tag that line, and then just rip it. Again, my game is not the short-term movements. I don't think people can predict the short term as well as what most people think they can. So you're living with lower probabilities and lower rates of success. You're also living with lower returns because the moves in the short term aren't as big as the long-term moves. So I play the big long-term moves. I don't try to worry about the short-term emotional-based movements, the cyclical-based movements. I like the big long-term, big picture view moves. Buy in the bottom and then just ride it on up and then add along the way. Will everyone be perfect in where they add? No, no one's going to be perfect. Perfect is something that you can strive for and refine to try to be as perfect as you can, but no one will be perfect. Here's housing starts. Housing starts barely decreased. It was like 1.45 million and now it's 1.42 million. I don't like how they say that. I mean, yeah, technically it decreased, but it's really just flat. I mean, flat with the housing starts. When these housing starts go down, you typically get recessions. I think that we are more like 2001 or 2, where we pull back, housing starts continue to go higher, and we get a recession. We cleanse some crap out of the system with the increased interest rates, but I don't think the housing market is just going to completely crash. Yes, we've pulled on back from these high levels, but I think it's being resilient at this time. And we'll see if we can get some movement to the upside. I don't think we're not just falling off a cliff. We've fallen off a cliff a little bit here, and then we're holding steady. Again, we'll continue to monitor it together. Here's Grady. Grady has a lot of really good charts. I posted this one again, just to let you guys kind of get this in the forefront of the mind here. It says the long-standing silver roadmap is still showing the way. It had a perfect back test last year, now a quarterly breakout in the making above the blue bull flag. Price objective 370 can briefly go much higher at the end of the bull. The far-fetched will soon be the new normal. And this could very well increase rapidly for a period of time. Here's copper. So Dr. Copper, he's saying copper, China's economy grew 4.5% in the first quarter, the fastest pace in a year and higher than the 4% predicted. And that's going to be obviously be good for copper and other minerals. Another Grady one. This is the S&P 500. New daily cycle high Friday, day 23 means this daily cycle should now be right translated bullish. Means good odds March 13th is a weekly cycle low. That in turn would mean the big drop many are pushing will not happen anytime soon. And this is important for other sectors. Agreed. And you want to look out the side windows. That's kind of what Michael Oliver always says. Very stylish setup with a pink bluish expanding wedge. So there's your expanding wedge. We've broken that to the upside and we're starting to move on higher. It actually looks good to move on higher. Is this the everything melt up? Very well could be. It says WSJ a little late to the game here. Got copper. Copper shortage threatens green transition. Challenges in opening new mines expected to leave production lagging behind rising demand. She says the market overall is pretty tight. Longer term, there's a narrative around resource scarcity and the green transition with EVs and renewables, as well as the build out of electricity grids. On paper, it's quite a substantial supply gap opening up over the next 10 years. There's no slack in the system, no buffer. Copper was the only metal with locked in demand growth. Prices would need to rise to 15,000 a metric ton to attract investment in new mines. Futures on the LME are around 9,000 a ton. Analysts say a lack of new mined resources is the main hurdle. Mined output globally in 2022 was 21.8 million tons, rising only 1 million tons over the previous 3 years. Analysts forecast little output growth in Peru and Chile. It is more of a when, not an if, copper demand is likely to surge. The question is how fast this transition will occur and exactly where green uses of copper accounted for 4% of copper consumption in 2020. But this is expected to rise to 17% by 2030. A lot of copper demand coming, guys. Refiners in China have been increasing production to respond to better than expected gasoline and jet fuel demand. Look at that thing go, guys. They are refining more unit million barrels per day than ever in history before. That is crazy. We've got Elon is correct. And what will be the main driver in population decline? The global oil energy cliff. Remember, green energy equals fossil fuel derivatives. Well, everything is a derivative of basically fossil fuel, in my opinion. But this is your world population growth going up dramatically alongside the dramatic increase of oil or the dramatic consumption of energy. Grady again, it says silver's now going for the first big resistance line and trying to break out. 36 and 42 are big resistance levels, but once above 30 level, it should start to move faster because of the red volume thin zone, making green arc realistic. Boom, 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 heading up higher over the next few years potentially. And again, this is the volume on the left-hand side. You can see the big volume here. You can see that's where all that trading has occurred. The more a stock trades at a level and the higher the volume is, the stronger the resistance or support level it is. We've got another strong level here, 22 or so, and another one at about 26 or 7 or so. And then you've got some levels up there at 36 and 42, which also have some strong, have actually thin volume. You can see this volume dramatically declines over the red line here. If you look over it, there's not much volume up there. Volume thin zone above red line, very little resistance from previous trading activity. And then the RSI is getting bullish above 50 there. Tavi says, Agricultural commodities just had another significant move today, which indicates that food prices are poised to rise considerably from their current levels. Inflation continues to embed itself into the economy through various channels. To highlight some pivotal ones, the lack of adequate investment in natural resources combined with the increasing living costs and consequent upward pressure of labor costs, as well as irresponsible fiscal spending and a trend towards deglobalization, have all contributed to the current economic landscape. In contrast to the inflationary pressures experienced in the preceding 3 decades, the recent upsurge in consumer prices appears to be largely driven by persistent structural factors. Agricultural commodities versus the food price. And we're getting a divergence here, which will eventually catch up. The food and agricultural world food price will go up with your DBA ETF. Cornerstone Analytics, it says March global oil demand hit the second highest rate ever, only surpassed October 2019. Bloomberg got data confirming your weaker than expected demand picture. Our oil demand estimate has been the most constructive out there, but we're even too low. It says oil slides lower as supply cut led price rally continues to fade. Oil fell for the second day. It says faded against a weaker than expected demand picture, but we don't. We have the second highest rate ever. There's a lot of misinformation out there, we'll call it. So that's what I've got for today, guys. A lot of good information there. Just seeing what people are talking about, what people are sharing, and now you know the most recent information, at least that's getting shared on Twitter by a lot of the larger accounts. But if you guys like the content, give me a thumbs up, subscribe to the channel, subscribe to the website. Love to have you in our community. Use the word discount in the coupon code. And we have a platinum question and answer session at 5 p.m. on Sunday. If you'd like to attend it, ask questions. You can even ask whatever you want, even if it's educational based, to get that out there and figure out what the next market moves are that are coming. All right, guys, we'll catch you next time. This is Finding Value.